Have you ever wondered how to invest in United States ETFs? Welcome to the captivating world of exchange-traded funds or ETFs, a cornerstone of the investment landscape. These financial instruments have exploded in popularity, becoming a preferred choice for many investors, and why wouldn't they be? Offering the benefits of diversification, liquidity, and cost-effectiveness, ETFs are an enticing investment avenue. And when it comes to United States ETFs, the allure only grows. They offer broad exposure to the bustling U.S. market, promising potential for long-term growth and stability. This video serves as your comprehensive guide to United States ETFs, from understanding what they are and their unique advantages, to exploring the different types and how to invest in them. So, buckle up and prepare to embark on an exciting journey. Are you ready to dive into the world of United States ETFs? Let's get started. First off, what exactly are ETFs? ETFs, or exchange-traded funds, are investment funds traded on stock exchanges, similar to individual stocks. They're designed to track the performance of a specific index or sector, from the broad U.S. stock market to specific industries like technology or healthcare. Now, you might be wondering, how are ETFs different from mutual funds? Well, while both offer diversification, ETFs have the upper hand in terms of liquidity and cost-effectiveness. You can buy and sell ETFs throughout the trading day at fluctuating prices, just like stocks. They also typically have lower expense ratios than mutual funds, making them a cost-effective choice for many investors. And unlike mutual funds, ETFs don't require a minimum investment. This makes them accessible to all types of investors, whether you're just starting out or have been in the game for a while. So, as you can see, ETFs offer a number of benefits over traditional investment options. Now you might be wondering, why should I invest in United States ETFs? Well, there's a whole host of reasons why. Firstly, United States ETFs offer broad exposure to the U.S. market. This means you're not just putting all your eggs in one basket, but rather, spreading your investments across a wide array of sectors, from technology to healthcare, from finance to consumer goods. Secondly, United States ETFs have the potential for long-term growth. The U.S. economy is one of the most robust and dynamic in the world, and many of its industries are global leaders. By investing in United States ETFs, you're essentially betting on the continued growth and innovation of these industries. Lastly, United States ETFs offer stability. While all investments come with risk, the diversified nature of ETFs can help to mitigate this. With their broad market exposure and potential for growth, United States ETFs can be a valuable addition to your investment portfolio. But not all United States ETFs are created equal. Let's look at the different types. First, we have broad market ETFs, which aim to replicate the performance of a major index like the S&P 500. They provide broad exposure to the entire U.S. market, making them a great choice for those seeking diversification. Next, we have sector-specific ETFs. These target specific areas of the economy like technology or healthcare. They're a fantastic way to gain exposure to a particular industry you believe in, without the need to pick individual stocks. Finally, we have thematic ETFs. These focus on specific trends or themes, like clean energy or e-commerce. They allow you to invest in a trend you're passionate about, providing a unique way to align your investments with your values or interests. Each type has its own benefits and considerations, so it's essential to choose one that aligns with your investment strategy and risk tolerance. So whether you're interested in tech, healthcare, or even clean energy, there's a United States ETF that fits your investment goals. Ready to start investing in United States ETFs? Here's how. The first step is to open a brokerage account. There are many online platforms out there that offer ETF trading, so you'll want to choose one that suits your needs best. Look for a platform that offers a wide selection of ETFs, competitive fees, and a user-friendly interface. Once your account is set up, the next step is to do your research. This is probably the most critical part of the investing process. You'll want to understand the ETF's objective, what index or sector it tracks, its expense ratio, and its historical performance. There are numerous resources available online to help you with this, including the ETF issuer's website and independent financial news sites. After you've done your research, it's time to make your purchase. This is as simple as entering the ticker symbol of the ETF you've chosen, specifying the number of shares you want to buy, and clicking Trade. But remember, it's important to monitor your investment regularly and adjust your portfolio as needed. Lastly, don't forget the importance of due diligence. Always double-check your information and consider seeking advice from a financial advisor if you're unsure. The world of ETFs is vast and varied, And while it can be exciting, it's also important to make informed decisions. Remember, investing is not a sprint, but a marathon. Take your time to research and choose the right ETF for you. Before you dive in, it's important to understand the potential risks. Now, while investing in United States ETFs can be a rewarding venture, it's not without potential pitfalls. One such risk is market volatility. Just like individual stocks, ETFs' prices fluctuate throughout the trading day, which means the value of your investment can rise and fall rapidly. This could lead to potential losses if the market conditions aren't favorable. Next, let's talk about tracking error. This refers to the discrepancy between the performance of an ETF and the index it's designed to track. If the ETF doesn't accurately mirror its index, it could lead to unexpected performance and potential losses. Then there are expense ratios to consider. These are the fees charged by the fund manager to cover operational costs. While ETFs are generally cost-effective, some can come with higher expense ratios, which can eat into your returns over time. It's also crucial to assess your risk tolerance. Are you comfortable with the level of risk associated with ETFs? Can you afford potential losses? These are questions you need to ask yourself before investing. And last but not least, it's always a smart move to consult with a financial advisor. They can provide you with personalized advice based on your financial situation and investment goals. Investing always comes with risks, but with careful planning and consideration, you can mitigate them. So, are you ready to take the plunge and start investing in United States ETFs? So, there you have it, a comprehensive guide to United States ETFs. We've explored everything from what ETFs are and how they offer diversification, liquidity, and cost-effectiveness, to the specific advantages of investing in United States ETFs. We've also delved into the variety of ETFs, the steps to invest, and the essential considerations and risks involved. Remember, United States ETFs present a world of potential for long-term growth and stability. Thank you for watching. Don't forget to subscribe for more investment tips and advice. Happy investing!